this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000. So I think there's been this sort of suppression of really good news. If that suppression is removed, I think it's a coiled spring. So in that scenario, I think we do exceptionally well. I think the game theory is on. It's slower than people maybe want in this impatient crypto world, but I think countries around the world are going to be buying Bitcoin. So there's structurally more demand than supply in Bitcoin. I think all we need is to release this sort of economic gloom that's hanging over us. If we do that, I think it's straight to the races.
According to Matt Hougan, there is still uncertainty despite the fact that the Bitcoin ETF market is changing quickly. In the past, the SEC has exercised caution due to worries about investor protection and market manipulation. However, pressure on U.S. authorities is increasing as a result of clearer legal frameworks emerging abroad and increased institutional demand. The most important issue is whether the SEC will accept this change and authorize other financial products linked to Bitcoin, or if they will keep delaying and driving innovation abroad. Hougan's fundamental tenet is that regulatory clarity will inevitably arise as the global market develops or as a result of effective U.S. leadership. Institutional capital may pour into Bitcoin if approvals quicken, which would cause a sharp increase in price. Take a moment to like this video, subscribe to the channel, and turn on notifications for more content on Bitcoin and the digital asset space. Also, drop your thoughts in the comments below. It helps with the YouTube algorithm and supports the channel. Thanks, and enjoy the video.
The thing that's happened in crypto over the last, let's say, 6 weeks is there has been so much fundamentally positive news, and it's just been buried sort of in the background. We've caused ourselves to ignore it. There's the strategic Bitcoin reserve, there's the SEC pulling back on essentially every lawsuit. There's progress on stablecoin legislation. There's talk of market structure legislation. There was the White House Crypto Summit. These are game-changing positive developments that should put Bitcoin trading at $150,000 or $200,000 today. It's been suppressed because in the short term, this overhang of the economic uncertainty is weighing on the markets. I think if that is released, we're at new all-time highs quickly, and we're on our way to where I think we'll be at the end of the year, which is Bitcoin 200,000. So I think there's been this sort of suppression of really good news. If that suppression is removed, I think it's a coiled spring. So in that scenario, I think we do exceptionally well.
I hear people talking about recession. I don't think they actually know what that looks like practically.
That's right. I mean, I've said before that I think the government has outlawed recessions. I think what's interesting about this particular moment, because you're right, we've been crying recession for 10 years and it's never arrived. The reason it's never arrived is every time there's a little wrinkle in the economy, the government steps in with stimulus, with reduced rates, with other ways of monetary support. We've sort of become allergic to any economic pullback, which is a natural part of the economic cycle. I think the thing that has people freaked out right now is, at least from the outside, the Trump administration is saying we're okay with a little bit of volatility. And so that monetary stimulus may not arrive in the way that it has since 2008. My core belief is that it will arrive. My core belief is that the government will blink, that we really are allergic to these economic pullbacks, that we're not set up anymore to withstand that kind of volatility. So I expect maybe even this week to see the government start to blink, maybe at Jerome Powell's press conference later in the week. But if they don't blink, if we're really going to sort of embrace this pullback, this cleansing pullback, then that'll be a challenge for the equity markets and a challenge short term for the crypto markets. I think we'll be okay long term, but I think that's the game that's being played right now. Yeah. Look, I think we could chop sideways back to all-time highs. I think previous all-time highs when we were at like 72. We saw us trade there from about March through November. I think there's a reasonable amount of support there. I'd be surprised if we went much lower than that, but who knows? It depends on how stiff the government is in refusing to respond to this economic uncertainty. But again, I go back to this core point, which there's this structural mismatch between demand and supply. The Bitcoin network is only producing 165,000 Bitcoin per year. Last year, the ETFs bought 500,000. Even if they buy half of that this year, that's more than the new demand. So there is this structural imbalance that I think puts a floor on Bitcoin that's higher than many people sort of expect. I think institutions are still moving in, governments are moving in, corporations are moving in. So there is some space to the downside, but I'd be very surprised, and as a long-term investor, very excited if we had the opportunity to buy below that, because long-term, I think the story is in. There's just too much demand coming into the market. The asset is too small. You have these three horsemen of insatiable demand for Bitcoin. You have the ETFs, which I continue to think will have strong net flows this year. You have companies. We saw MicroStrategy buying more Bitcoin. I think the number of companies buying Bitcoin is going to triple this year. I think the game theory is on. It's slower than people maybe want in this impatient crypto world, but I think countries around the world are going to be buying Bitcoin. So there is structurally more demand than supply in Bitcoin. I think all we need is to release this sort of economic gloom that's hanging over us. If we do that, I think it's straight to the races. Yeah, dip and rip, I think, is the story here. If we get negative news, I think it's a pullback, but I think there's so much good news that's been sort of stored as dried powder that eventually that will be released. Eventually, it can't be held down forever, right? We have to step back and remember that a year ago, we had Gary Gensler in a very challenging environment. And today we have a strategic Bitcoin reserve and probably market structure regulation. I don't think the market is priced in at all how different those two scenarios are. So yes, if it pulls back, I think it's dip and rip. And eventually we will get to where we're going. Just whether it'll be a frustrating spring or an exciting spring is probably the question in the market.
Matt Hougan acknowledges that Bitcoin may face short-term price swings due to government policies and overall market sentiment. However, he remains confident in its long-term growth. He highlights Bitcoin's historical pattern. When the S&P 500 drops by 2% or more in a day, Bitcoin tends to fall slightly more. But over the following year, it has typically rebounded with an average gain of 190%. Gold also provides information on the future of Bitcoin. A growing inclination for assets outside of the conventional banking system is reflected in the increased demand for gold. Bitcoin is probably going to take a sizable chunk of that market as long as this trend persists. Bitcoin would have cost around $800,000 per BTC a few years ago if its market capitalization had been equal to that of gold. That goal has now increased to $1 million, and Bitcoin's potential value increases in tandem with gold's ongoing rise. Now, let's dive back and hear what he has to say.
I sort of envision that it could get better from what it was. Maybe we could get from sort of a 50-mile tailwind to still air, right? Neutral. I really didn't even in my wildest imaginations think that we went from that to, a full gale force tailwind pushing us forward, right? It's really hard to imagine. I mean, a strategic Bitcoin reserve, saying those words before August of last year would get you laughed out of polite company. No one would take you seriously. There's no way the US government's going to hold Bitcoin on its balance sheet until the Bitcoin conference of last year, where that sort of started to enter polite conversation. And now we've gotten that and more. I mean, we have a crypto czar. We have Paul Atkins maybe coming into the SEC, who worked in the crypto market as a lobbyist. It's an unbelievable positive trend. And I think the market hasn't accepted it. They haven't realized how big a deal it is, and eventually they will. I mean, look, when I look at things outside of Bitcoin that people are excited about, what are they excited about? They're excited about stable coins. They're excited about tokenization. They're excited about agentic AI. If I look at who's the market leader in those three areas, Ethereum has the largest share of stablecoin issuance. It has by far the largest share in the tokenization market. It's the leader in the agentic AI space. If you just look at where the demand is bubbling up, it's still bubbling up on ETH and ETH layer 2s. I'm excited about a lot of the other alt layer 1s. If I were investing in this space, and I do, I would own a basket of them because you don't know who will win long term. But anyone writing off Ether is ignoring the fact that that's where the users still are in the things people think are going to be multi-trillion-dollar markets in the near term. I don't worry about ETH's ability to monetize them. I think one of the reasons that ETH has struggled is it sort of monetized too early. We got $15.99 and we started talking about, revenue and volume and buybacks too early. It'd be like Facebook if it did ads 2 years after it was formed. It was too early. What I worry about are the things that are going to be multi-trillion-dollar markets being built at least in part on ETH. And when I look at those three things, ETH is the leader. So I think it will be fine long term. It could continue to struggle short term, But long term, that's where the users still are by and large, in these real world economic entities that are going to be a big part of sort of our blockchain future. So I like ETH from here if you're holding for, the next 5 years. I don't know where it goes over the next 5 weeks. Well, I think gold is telling you everything about where the market goes, right? So the thing about Bitcoin, which is really challenging for people to accept, is it's a risk on asset in the short term, and it's this hedge in the long term. If you look at how Bitcoin has historically responded to market pullbacks, on days when the S&P 500 is down 2% or more, Bitcoin on average falls more than the S&P 500. It falls about 2.6%. But if you hold it for a year after that, on average, it's up 190%. Again, it pulls back in the short term because it reacts to these risk on, risk off conditions. But over the long term, its story prevails. What gold is telling you right now is that the world's demand for a store of value asset outside of the fiat system is bigger than it's ever been before. Bitcoin will eventually get its share of that market. So as gold expands the size of the store of value market, for me, the price target for Bitcoin gets higher, right? We talk about Bitcoin matching gold. A few years ago, that meant $800,000 Bitcoin. Now it means $1.1 million Bitcoin. So let Bitcoin lead, let gold lead the way in the short term. Fine, it's a safe asset. But what it's telling you long term is Bitcoin is an even bigger deal than you thought it was. And it's going to eventually catch up to that reality. I think it's going to be more market uncertainty. You could see Bitcoin go back to, 72,000 to its previous all-time highs. I don't think there's downside really below that. I think there's a great deal of support right there. In the long term, this good news is not going to remain suppressed. In the long term, the good news will make its way into the market and we will eventually get to where we're going. But yeah, if government officials hold the line that they're okay with economic volatility, they're okay with a short-term significant pullback in the economy, that they're not going to come to the rescue with at least more relaxed monetary or fiscal policies, then I think, volatility, we're going to chop sideways. We're all going to be frustrated. And that's the game that we're playing. But again, for long-term investors, I'm not sure it matters. Bitcoin is going to get there eventually. Crypto assets more broadly are going to get there eventually. But whether it's like a very exciting spring or a very frustrating spring could depend on what's said, later this week.
Matt Hougan's observations highlight a significant feature of Bitcoin's market behavior: its dual character as a long-term hedge against currency instability and a short-term risk asset. Bitcoin's historical tendency indicates that it rebounds stronger over time, even though it tends to decline when traditional markets are volatile. Bitcoin usually falls by a significantly larger margin, for instance, when the S&P 500 drops by more than 2% in a single day. After such a decline, Bitcoin has historically increased by 90% on average if kept for a year. This pattern demonstrates its long-term potential and tenacity in the face of transient price swings. The increasing demand for gold is one of the main indicators bolstering Bitcoin's future expansion. Outside of the fiat system, gold has traditionally been regarded as the best store of value, and its rising demand is indicative of a larger investor desire for assets unrelated of currencies controlled by the government. According to Matt, Bitcoin will inevitably take a share of the growing market capitalization of gold, solidifying its status as digital gold. Bitcoin would have cost around $800,000 per unit a few years ago if its market capitalization had surpassed that of gold. That amount has already increased to $1 million, and Bitcoin's potential value will only rise in tandem with the ongoing appreciation of gold. Hougan emphasizes Ethereum's superiority over Bitcoin in 3 key areas of blockchain innovation: tokenization, stablecoins, and AI-powered applications. Ethereum is in the forefront of integrating AI into blockchain technology, holds the highest proportion of stablecoin issuance, and dominates the tokenization market. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.